Hey everyone. Look, it's a fascinating time in global macro right now because there's so much confusion as to where we are. I think the world is split. If I look at Twitter, it's fighting all day between everything is going to crash. Can't you see there's a recession coming? Can't you see there's a credit contraction? Can't you see inflation? And then there's others, of which I lie on the other side of the camp, which is tell me something we don't know. What we probably need to start looking at is the other side of this cycle. So I'm going to dig into my views. But as ever, look, the study of markets and the study of economies, you don't ever know who's right until it plays out. But what I want to give you is an understanding of how I'm thinking through this. And then over the course of this week or so, we'll be speaking to some of the most amazing people to get their views, see how they differ from mine. Because what's important for all of us is to hear the other views. And then we can put it all together and decide, okay, what do we think the best course of action?
Fed's choice, pause or play. Bitcoin's been on a wild ride recently, and it's got a lot to do with Uncle Sam's moves. Last week, Bitcoin gained about 2.5% as the US dollar lagged behind in the currency Olympics. The battle of the century, Bitcoin versus the US dollar, and it looks like Bitcoin's been winning. This week's drama? It's all about the Federal Reserve's upcoming powwow on September 19 to 20. They're having a tea party and deciding whether to change the interest rates or keep them as they are. Now the Federal Reserve's got some tough choices to make. Last week, the U.S. Consumer Price Index, CPI, showed a bit more inflation. But the core inflation, well, it's going down. Most folks on Wall Street think the Fed will hit the pause button this time. It's almost a 99% probability, according to CME. Last week, it was 97%, and the week before that, it was 93%. Crypto traders are loving this pause idea. But the Fed's not just talking rates, they're also sharing their economic plans for the rest of 2023, including the possibility of raising rates. Hold on to your hats. This could get interesting. Bitcoin's targets for the week with this rate pause excitement. Bitcoin might be aiming for a resistance zone around $27,000. It's a cool 1.5% jump from where it's at now. But remember, after the Fed's decision on September 20, we might see some profit taking. That could put the focus back on the support line around $25,650. Buckle up, it's going to be a bumpy ride. Crypto community side-eyeing BlackRock's XRP rumors. Crypto fans are side-eyeing recent rumors about BlackRock shifting its crypto love from Bitcoin to XRP. But here's the twist. Many folks are calling it fake news. This all started when an article claimed BlackRock was moving from BTC to XRP, but it turns out the article was generated by AI and reviewed by an editor. The crypto community isn't buying it, especially since there's no real evidence to back it up. Some even went as far as to call it fake news. However, some folks did point out a connection between Ripple and BlackRock through former Ripple Labs exec who now works at BlackRock. The reality? We'll have to wait and see. But for now, it's a big question mark. Let's continue our discussion with Raoul Pal.
But the spoiler alert for me is I'm really bloody bullish, and I've been bullish all year. And I was starting to get bullish at the back end of last year. And so far, that's played out well. My main bets have been crypto and tech, and they've both had phenomenally good years. In fact, the Nasdaq's had one of its best ever starts to its year. Now, does that mean I'm going to be right going forwards? Who knows? I think I've done the homework. I think I know where we are, but obviously things can change. I also think that there is always volatility involved in markets as well. And the market's job is to try and throw you off. Right now, generally speaking, most people have missed the massive rally in equities. And so they're hoping that the market comes lower. So we've seen that from the institutional surveys. People just haven't been involved. So a lot of it's been retail and passive money, index funds, stuff like that, without people actually making money from it. And that's always interesting to me because we come into year end and it tends to mean that somebody's going to have to make a decision how they want to report to their investors at the end of the year. And the pension funds and others don't want to show that they were massively underweight equities all year. But let's see how that plays out. I've got some strong views about the rest of this year as well. So without further ado, let's go through some of this. So firstly, let's think about growth, the growth element. Where the hell are we? Now, many of you have seen this chart of the GMI business cycles dominoes. And this is really important to understand because, as Stan Druckenmiller says, you never trade today's news. You need to understand which part of the cycle is driving the asset prices and which part of the cycle is driving the Federal Reserve. So on this, myself and Julian Bittle, who works with me, Global Macro Investor, well, our job is to live as far out as possible. So we're in that 8 to 10 months area ahead where we're looking what's happening to the cycle. We actually go further out, but the bulk of our business cycle work, as opposed to our secular work, is this 8 to 10 months out. Now, the markets have been roughly trading 2 to 4 months ahead of the business cycle. In some cases, stuff like technology and crypto, they've actually been even further ahead than normal. And then we've got the central bank. Well, they're lagging with the ISM. If we take the ISM as where the economy is today, because it's basically a real-time GDP indicator, well, the central banks, well, they're looking for CPI to come down and unemployment, and those things are really lagged. In some cases, 6 to 8 months, and when we get down to the big inflation stuff like shelter inflation and wages, I mean, they can be over a year, sometimes 2 years lagged as that keeps changing. The ISM gives you the snapshot of where we are, and it's been around this kind of 46, 47 level for a while now. Now, that's a really important level because historically, that has pretty much had a 100% chance of recession. And I think most of us realize we've had a recession. I think most businesses have seen a slowdown. I think many people have laid off jobs, and we're seeing, and I'll come on to jobs later, a change in the job structure. But that recession has not been called yet. We've seen the economic data, the GDP data, still somewhat buoyant. But I think it's there, and I think when all is said and done, the recession will have been called during this year. But here's the rub. I think it's actually about to start becoming over. Now, again, I'm using the ISM. The ISM leads GDP because that's lagged by 3 months. So therefore, by the time the ISM gets positive, which I think is coming, and I'll show you that in a sec, that's all going to play out kind of Q1, Q4 to Q1. But the point being is we are at the trough of the actual cycle right now. So if we look at what we use as our main indicator, the GMI Financial Conditions Index, it has a 9-month lead. Now, this Financial Conditions Index is a blend of the dollar, commodity prices, and rates. Now, it led the whole cycle, suggested the ISM is going to recover by a significant portion of time. It also gave us the trough 9 months prior. So we've known roughly when the ISM was going to trough from using our indicator a long time ago, and what that was going to do to financial markets. You can see, interestingly now, it's rolling over somewhat. That's based on the fact that the dollar's gone up recently and rates went up recently. So it tells us something that we may see growth slow down or have a soft patch later in 2025. And anyway, let's not get ahead of ourselves. We're focusing on now, boom, bust. It's that crash, or are we in a next bull market idea that I want to go through.
And that concludes an insightful episode of Money Tail Case. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.